Well, we were talking about the markets having started fairly well. Now it's taken a turn for the worse right now. The frontline indices are mildly in the red. The mid-cap index even more so. The story of the day so far can be summed up in the crisscross lines that come up for you. When we opened the markets, we had 1,500 stocks which are advancing for about 600 stocks which are declining. Now those lines have intersected and we have, 1,400 stocks which are in the red for just about 1,200 stocks which are in the green. That's actually a perfect time to weigh in on what investors are seeking from, everyone, the corporates, the institutions, and the whole ecosystem. So the 21st Motilal Oswal Annual Global Investor Conference, MOAGIC, as we know it, kicks off from September 1. For the curtain raiser, now we have Rajat Rajgarhia, who's obviously the Managing Director and CEO, Institutional Equities, and Sachin Shahane, who is obviously the Head of Sales, Institutional Equities, joining us in our studio as well. The conversation was promised. Thanks a lot, Rajat and Sachin, for joining in.
Thanks
at a time when so much is happening, the question is, what would be the top few questions on everyone's mind, and what are you doing to ensure that those questions will be answered?
Yeah. So, this 21st edition of our conference is happening on a very interesting backdrop.
Yes.
The last 1 to 2 months of events have given a lot of reasons for people to engage with companies, with investors, to find out what lies ahead. When we started planning for this conference, it looked like a one-way street this year for India. But I think 2-3 things that have happened. The last quarter earnings have not been that great. Right. We are still grappling with a single-digit earnings growth. Second, I think you are seeing this entire tariff, and suddenly it looks like that this tariff war is like for us only in this world. And the third, we are seeing now RBI and government both coordinating very well to stimulate the economy in every possible manner. All these factors have important consequences on every company that comes at the conference. So I think investors would have very directed questions to know from the companies to what extent they get impacted by all of these and what are they doing to mitigate this, right?
I'm curious to know, when you say investors, what are the queries already? What is the participation going to be like from the foreigners? Yeah. Because they're the ones who've been sitting at the edges. And in fact, because it became very clear, like you were saying, that India is being singled out, and as it became more and more apparent that we're not getting a trade deal immediately, the selling intensified. It was 17,800 crores last month. August now, it's now almost 30,000 crores. And they're going to other markets. They're going to Korea, China, which is okay. Yeah. But what's the sense you have from the foreign participation side?
So, we have large teams from multiple long-only global foreign investors, be it the sovereign funds or be it the largest of the investors, right? But I think, let me give you a flavor that when you look at Motilal Oswal conference, when we say it's a large conference, we have 1,200 plus investors who attend this event. We have closer to 200 companies. But more importantly, our track, which features 16 speakers, and these are speakers from all walks of life, listed, unlisted, corporate expert, right? It's not just about a stock conference. It's about a framework. It's about a philosophy. It's about how do you see this country. This is a century of opportunities. We just completed a quarter of a century. And we all have been benefited from this quarter of the century growth, right? Last 25 years, we grew from a base of 400 billion, 10% compounded, to today reach 4 trillion. Next 25 years, we will grow at 10% compounded on a base of 4 trillion. So imagine you are going to build one India next year, which existed in 2000. I think this conference is about how do we widen our scope of investing so that we capture the bigger opportunities, point number one. And point number two, of course, while the big picture remains always good, in the short term, you have to face the adversities to make sure that you don't get caught off guard.
So foreign participation isn't lower this year at the conference compared to previous years? There's adequate interest.
In fact, I would say that the domestic participation is just growing every year, as you can see in the market and as you can see in our conference.
आप सारे FIS को एक conference room में बंद कर लीजिए.
Just lock the door from outside.
अब आप तभी निकलेंगे.
See the big picture.
Per person, $1 million.
Right वाला button दबाएंगे आप.
That's a good idea.
मैंने बोला मत बोलिएगा, but you must have seen Akash Prakash wrote a piece recently saying valuations still kind of high relatively compared to EMs, but he said his point essentially was, the punch to me was, you can't have an expensive market with just 10% kind of earnings growth, which you also alluded to, that earnings growth has been kind of poor. And that is the reason why, and this question, why are FIs such big sellers? And Sajid just told it has nothing to do with tariffs, this 50%, etc. It's earnings growth. We spoke with Rajiv Batsra of JP Morgan, who kind of also identified poor earnings growth as the number one reason. What is your sense, Rajat? Is this a write-off year? Do we need to roll over to F527, which the market anyway will do? What's your sense?
Yeah, I think bang on. The single most reason for our market underperformance is earnings, right? If we grow at 15-16%, 20p is attractive. If we grow at 5%, 20p is expensive.
Right.
Our PE is not going to come down. So if markets will stay here till the time the earnings growth don't happen. Point number one. Point number two, whenever earnings growth aggregate is slow, whichever pockets grow, they get disproportionate premium.
Yeah.
So even in today's market, I can tell you 5 stocks which are still doing very well, and they were not that they are surprisingly doing well. They were supposed to do well because their numbers were doing well. So that's the second point. Third, on the aggregate earnings, I think there are some both structural and cyclical factors which have come together to make this 5% growth coming, right? Like IT, which has always been a bedrock of earnings for corporate India. I think structurally they are into a single-digit earnings growth mode now because of the way businesses are shaping up. But many of the domestic consumption, industrials, financials, they have to come and make up for that. They are in a cyclical low right now. And I'm more positive that the low base of the last 12 months, a lot of the stimulus which has come from RBI already, which will take effect, and the government stimulus which is likely to come over the next few months, should at least push our aggregate growth rate from this 5-6% to more like a 12%. Is 12% good enough? That markets will decide, right? But I think the P's are unlikely to contract much. The earnings has to move up for the market performance to return.
So to that extent, then the obvious question is to the corporates that you're getting on the conference. What is the mix of those corporates like? What sectors are they predominantly from? You said unlisted, listed. And what do you think would be, their idea on growth in earnings? I mean, because earnings growth is what will drive the market, everyone will be asking those questions to the corporates as well. What is it that will drive your earnings growth? Because you can, on the one hand, speak about the macros, blame the macros, or benefit from the macros. Eventually, it is your company's doing that will take the earnings higher.
Absolutely. So, I think this year is also a transitory year on many regulations impacting the earnings. For example, if you look at capital markets, you had regulations which came in, especially on the broking side, which has impacted earnings. If you look at, suppose, the GST cuts, we keep hearing there can be postponement of purchases, which can lead to some inventory impact. That will also come in. If you look at the way this tariff thing can kick in, right, this will also have. So I think people will at least try to focus how much impact in the very short term is going to come. But more importantly, there will be some businesses which will weather this very well. We have 180 companies at the conference, but each investor needs just 5 ideas.
That's what. So I was going to ask you, so which are the five fastest growing companies of, let's say, FY27, which will come at the conference?
Or the tracks where most amount of investors have said, okay, this is
I'll assure you, I will come next Wednesday when the conference gets over. And
just to share
something, a little more flavor on the companies.
Yeah, so just to share on the question which you just asked, so a lot of interest in logistics names, a lot of interest in consumer discretionary, industrials.
What companies would they be? And you have unlisted as well. So where is...
But these are largely listed names which I'm talking about, where there is, so all the listed names in this space. And as Rajat just mentioned, non-lending financials is again a very big space where there is...
Unlisted companies at the conference?
Roughly about 15% of the conference would be unlisted.
And how much of that 15% is up for listing next 1-2 years?
Not at least the next 6 to 12 months.
And from which spaces are the unlisted companies?
Essentially, new age, consumer, logistics. Look, because I think unlisted companies come with a very different perspective to share with investors, right? So we always try to make a blend of at least 15% of the conference to be unlisted companies.
So a lot of interest you said was on logistics, consumer discretionary and non-lending.
Industrials, non-lending financials and auto anchs as well.
What about the IT guys? You said, it's structurally low. I'm sure at this point in time, a lot of the investors would want to know what are they doing to mitigate this AI storm which is coming in? How is it that my IT portfolio can look a lot better? How will the earnings increase?
Yeah. So, in the case of IT first, their corporate access anyways is top notch. They meet people very frequently. Their quarterly disclosures is pretty high. So it's very little to again figure out we still have good participation, but I think businesses are more predictable right now, even though they are slow. In a conference, I think people try to figure out two things. Stocks in my portfolio which I think are not going to grow well, and stocks in my portfolio which I don't have which are likely to grow well.
Yes.
So that kind of an adjustment people want to do. I think suffice to say that 1,200 investors, 180 companies, roughly about 15,000 meetings that we are doing, right? Each one of the investor is getting their share of what they want, right? Hopefully at the end of this conference, they get some actionable to do for themselves.
I asked this question to Ramdev ji just the other day. Yesterday we had him on, right? And I was asking him what the local HNI money is doing, the non-retail money. The retail money is nicely doing their SIPs and they're keeping the market up. So he was laughing about it. Jokingly, he said that the problem with that money is that it'll be on the sidelines. Jab tak bazaar thanda hai. The moment there is momentum, they'll all quickly jump onto the bandwagon. Yeah. But your assessment, you or Sachi, the one when you talked, because there are large participants as well. So the non-mutual fund domestic money that we're talking about.
So just to share a data point on that, the AIF side, which is largely the HNI and very high net worth retail money, that is seen commitments of almost 14 trillion. Which is a jump of 14 trillion INR, I'm saying. So that is a jump of almost 20% year on year. This is a data shared by SEBI some time back. And of which still there is a dry powder of almost 8 trillion, which is sitting on the sideline.
8 lakh crores of HNI liquidity.
AIF money sitting on the sidelines.
And a lot of the HNIs are interested in unlisted. That's
increasingly.
That is
where
just
focusing. If you look at today, NSE shareholding. In the last 5 years, the entire VC, PE, FII holding has come to India, to the HNIs and the family offices. You looked at the Zepto deal that as a house we did, a large number of HNI. I think a lot of the HNI money, what Prashant is mentioning, is finding way, right? Typically, that used to be the space for private equity or funds that has become for...
I'm not joking, Rajat. I was talking to a venture capital fund in Bangalore, and I was just chatting about strategies. I said, well, looks like some of these guys in Bombay have more companies than we do. They've been in the VC fund for 20, 25 years. So it's absolutely correct. It's completely transformed last couple of years.
That's something that Uday Kota keeps quibbling about, right? That the second generation is now looking at venture capital investing as against...
No, these are old, 30-year-old veterans in the market, public market investing, who now they're kind of doing backward integration. They're going offices, but finding companies earlier and earlier in that sense.
So, we focus a lot on the mutual fund daily flows, monthly SIP flows, right? What we don't capture is the non-mutual fund flows into the equities, which come in multiple forms. Insurance, HNI money, AIFs, etc. That someday, I think somewhere we will...
Motilal Oswal should come up with a report every month.
Actually, it's a quarterly...
We will do that. Thank you. That's a second idea. First idea was to lock people into...
No.
Second idea.
The second is the more actionable idea.
It's a very doable idea.
It's all the best to you as you organize this massive conference. It's always great to have both of you to kind of sort of preview the conference for our viewers. Really appreciate it, Rajat, Sachin.
Thank you.
Have a good time.
Thank you.
We'll take a quick